So if people had been selling Tesla to buy Nvidia, you think the best thing to do is to invert that because you've probably made a lot of money on NVDA.
Well, let's be clear, Sully. I'm long Nvidia and I'm loading up here on Tesla, but I think you're absolutely right. When you look at Nvidia, it's 3 times the size of Tesla from a market cap perspective. It's now the 3rd largest. But the parabolic move in Nvidia, if you look at a chart here, just since January, up 50%. And this is not up 50% from where it was cut in half in 2022. This is substantial. This was nearly $1 trillion company. Now to be up where it is, I think it can go from 750. It has to back and fill. So I think with earnings expectations, think about it, Sully. The earnings expectations for revenue for Nvidia are over $20 billion. That's 3 times. That's 3x what it was just a year ago from Q4. So I think there's high expectations. I know they're printing money right now, but I think there's a pullback short term. You're seeing RSI levels overbought, but Tesla seems to be a different type of AI approach. And I know it's the Mag 7. It's not getting any love right now. It's about to trade 200 today, so we are seeing some buyer step in. But nonetheless, Sully, I think we have to understand there's huge opportunity in Tesla here, and I think you have to profit take in NVIDIA.
Yeah, and I want you don't want all the we call them Teslarians. I guess what do we call the Nvidians? You don't want I think I just made that up. You don't want the Nvidians coming at you. You still love the company, but I get the mentality, which is, everybody's like, oh, drop Tesla. It's not Mag 7, it's Super 6 or Spectacular 6 or whatever name they want to employ to it. I get your take, and being a smart trader is trying to find the opportunity when other people are selling.
That's right, and I'm utilizing options to define my risk. I'm selling a risk reversal here in Tesla, selling the 185 March regular expiration, buying the 200 call. But I think you have to realize, just take a step back, Sully, not to get too wonky here, but from an AI perspective, I know we are really seeing Tesla viewed as more of a cyclical car company. I know it has a tech influence, but think of the spend. Nvidia got a lot of press for buying SoundHound. They made a $4 million with an M. $1 million investment in that. Right now, this year in 2024, Tesla's going to spend $10 billion on their AI development. So I think from the longer play, I think you're going to see Tesla back and fill up to $300. You have to really put the emotion aside on Elon Musk. You never know what's going to happen or what tweet's going to come out. But I think from a true value, from a true trade perspective, this is a great pairs trade going in next Wednesday, where I think you will see a reprieve or a relent in the price of Nvidia.
Jeff Kilberg, got a macro view on the markets right now? We just talked about 2 of the most important stocks that are out there, but do you have sort of a macro view? Are we ever going to see this broadening out that some people are talking about, that, all the 3,000 other public companies that exist will finally get a little love?
I think that it is coming, and I know Ryan Dietrich talked about this morning on Twitter about this small cap explosion. If you see a breakout in small caps, that's the breadth you're looking for. But bigger picture, Sully, we can grapple about when, or even talk about if, how many points are going to be cut. But we are going to see a rate cut this year in 2024 of 100 basis points, and that's coming. I don't care if it comes in March, May, or June, but that's coming, and that's why you saw those animal spirits that Kate referred to. You're seeing people trying to utilize that $8 trillion in cash. They're trying to get it to work because they've been chasing, and the bears continue to be in the hurt locker. That's just a fact. So I think there's more room to run to the upside. I think we're going to test back and fill here to this 49.50 level in the S&P 500, but we're going to make new highs, I think, next month.
You just saw a financial analyst make a compelling contrarian case for a major stock. His thesis goes against the herd mentality right now, and that caught our attention. In today's video, we'll be examining why this philosophy of inverse momentum investing merits consideration and how it could set up substantial gains. Going against the grain requires conviction and intellectual honesty. As we advance our central investing thesis shortly, I first want to briefly showcase the enormous technological progress being made in AI, enabling generative applications like seamless video creation. The capabilities emerging inspire awe and optimism about the abundance of innovation still ahead. We have AI-generated images prepared to display this remarkable advancement after covering our market analysis. But for now, let's dive back into the investing philosophy and valuation metrics, suggesting this contrarian opportunity offers strong upside. Welcome back to InvestMinder, where we cut through the noise to uncover market inefficiencies. If that appeals to you, please subscribe. Now, onto the premise. When investors flood disproportionately into a stock, its competitors often become relatively undervalued, presenting a chance to buy low. We'll apply this thinking to the targets mentioned in the video, analyzing why the herd may have it wrong, and how seizing this window of opportunity could generate alpha. Of course, we aren't professional advisors. This video is for entertainment purposes only. Please do your own research before investing. Alright, let's dive into the thesis and valuation metrics that suggest this philosophy could yield strong upside. In the video, the analyst calls out a major momentum stock, Nvidia, noting its parabolic 50% surge since just January. With its market cap now exceeding $750 billion and 2021 revenue multiplying by 3x, expectations baked in seem extraordinarily high. Yet, when viewed in contrast with Tesla, a disconnect emerges. While both companies utilize AI and bleeding-edge technology, the herd piles into the Nvidia narrative, while negative sentiment increasingly permeates Tesla coverage. Digging into the numbers, we see Nvidia expects over $20 billion in quarterly revenue. A staggering figure. However, as the analyst notes, Tesla plans to spend $10 billion this year on AI development alone. Though a fraction of Nvidia's market cap, this still represents a massive investment in future-proofing. Add in Tesla's 46% share of the EV market, battery innovations like the 4680 cell, and new factories ramping production. The long-term growth story seems largely intact. Yet with the stock sliding near 52-week lows around $200, Mr. Market prices in seemingly little upside. The analyst suggests an intriguing pairs trade to capitalize on this apparent mispricing, selling Nvidia calls while simultaneously buying longer-dated Tesla calls. This expresses a contrarian view that momentum may soon swing positively for Tesla as negativity gets priced in. Rather than fight the tape, the philosophy here follows the old adage, buy when there's blood in the streets. With Tesla grossly underperforming the broader technology sector in 2023, the herd ignores the name while chasing Nvidia's vertical ascent. This likely creates overvaluation in one name and undervaluation in the other. Of course, no investment lacks risks. Nvidia may well continue to astound with earnings beats while Tesla's execution or deliveries could stumble. Macroeconomic issues could further weigh on multiples across equities. However, for those comfortable going against the grain, seizing this window of negative sentiment and momentum presents opportunity. As the analyst notes, unloved sectors often rebound the most vigorously in recovering markets. While the pairs trade suggestion provides an interesting tactical angle, investors might also consider allocating directly to Tesla stock at current levels, while trimming Nvidia exposure. With Tesla roughly 30% off its highs, but Nvidia up nearly 50% in 2023, mean reversion tailwinds blow favorably for the former. Beyond short-horizon technicals, Tesla's long-run growth drivers support reclaiming its valuation premiums. The ongoing EV revolution represents a multi-trillion-dollar market opportunity over the next 2 decades. With Tesla's leading position in technology, charging infrastructure, brand, and access to batteries, it seems primed to dominate this secular transition. While competition looms from established automakers, Tesla's first-mover advantages hint at economic moats. Contrast this with Nvidia, a remarkable company pushing chip design frontiers, but facing end customers struggling with excess inventory. Data center demand remains strong long-run, but gaming GPU demand seems more cyclical and difficult to predict. With gaming revenues representing over 30% of FY23 sales, that cloudiness threatens volatility.
Financially, Tesla produced $81 billion in 2023 revenue and over $12 billion in operating cash flow, proving its business model at scale. While both high performers deserve premium growth multiples, current sentiment gaps warrant consideration. As legendary investor John Templeton advised, the time of maximum pessimism is the best time to buy. Applying that wisdom, today's skittishness around Tesla seems precisely when bargain hunters get rewarded. As we've been discussing the power of forward-looking analyses, I wanted to tangent briefly to showcase just how rapidly algorithmic capabilities are progressing in areas like video generation. The clips you're about to see demonstrate remarkable creative advancement in AI over a condensed recent timeframe. While limitations certainly remain, the pace of innovation is tremendously exciting. Just a couple years ago, intelligent content creation like this was utterly infeasible. Yet today, we interact seamlessly. It inspires awe regarding the abundance on the horizon. Now a quick montage glimpse into the future being charted every day, courtesy of AI's extraordinary evolution.
I live my life a quarter mile at a time. And you know, when you're living life in the fast lane like me, you need fuel that matches your intensity.
Oh, that's hot. That's hot. Uncle Phil, come try this.
As we wrap up, it amazes looking back at how exponentially AI capabilities have grown over the past decade. Just a few years ago, generating long-form video scripts was completely out of reach. Yet today in 2024, we take such creative applications largely for granted. Think about areas like autonomous driving, medical diagnosis, content creation, all undergoing rapid transformation courtesy of AI. Tesla certainly aims their substantial investments here toward achieving full self-driving capability ahead of competitors. But the implications stretch much wider. According to one estimate, the global AI market has expanded over 40% annually since 2016, reaching $93.5 billion last year alone. With projected growth north of 20% in coming years, AI promises to become the most impactful technology in human history. Yet still in its early days, limitations remain before generalized intelligence gets unlocked. Companies wrestle with data quality, algorithmic biases, model uncertainties, and other challenges to expand real-world usage. But the progress inspires awe. What emerged just 5 years back as narrow, unreliable prototypes now conducts nuanced conversation, generates original artworks, and optimizes logistics networks. The creativity unleashed offers a glimpse of the abundance ahead. So in the areas we cover here, from investing to technology, appreciating both the realized accomplishments and the scope of the yet unknown reminds one of AI's thrilling potential. We can't wait to continue traversing this landscape together with you. Now, before signing off, if you enjoyed this transparent, hype-free analysis, please subscribe to catch future videos.
And we'll see you next time. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep these videos making with all the likes and subscribes. Have a great day, and we love you all.